In this video, traders, we're going to look at how well do you tolerate pullbacks, and do you even need to? Stay tuned. Hey guys, a very warm welcome to you. All right, so how well do you tolerate pullbacks? Now, this is a bit of a subjective question because one person's pullback is another person's noise. But really what I'm getting into in this video is, do we need to tolerate pullbacks? Is there a way that we can sit through pullbacks and them not be uncomfortable? Is there a way that we can kind of determine whether it's going to be a pullback? Can we be at peace with ourselves, for want of a better word, that if it stops us out, it stops us out? How can we kind of get on the meat of trades that have got the potential for longevity and to give us that decent long move that we all want? Or how do we kind of distinguish between the two and are happy with it if it doesn't give us that? So, if we're looking from a, I guess it's from a swing trader's perspective, really. From a day trader's perspective, you know, most of the time, we've got a good idea on what a pullback is because we've only got a finite number of pips or ticks that we're expecting in the day, and we work that back off an ATR and we say, okay, well, we're expecting, let's say, 150 pips move in the day. If we've already moved 80 and we're pulling back, then our judgment is really, okay, well, is it going to pull back and do the other, whatever I said, 80, didn't I? So other 70 the other direction and go back down to the downside, or is it going to pull back and continue? And so we get a little bit more guidance in our favor, if you like. And I know I'm oversimplifying that, and I get it, but let's look at it from a swing trading perspective. So from a swing trading perspective, we kind of have this scenario, right? Well, we get in, let's say we're long here and we're in on a pullback, oversimplifying it, but you get the point. And now we're kind of sitting and chugging along. And then the market starts to do this. And there's a couple of things to note here, guys. And the first one is we've got to be careful that we're not over obsessed with our P&L. And I think this is really the root to it. I might have skipped a few steps here, but this probably makes more sense, is that we're constantly watching our P&L. Let's say that's been 4, 5, 6 days, whatever it may be for our swing trade. The market's gone up nicely. We're up very, very nicely. And the problem we have is, if we've been monitoring our P&L or our portfolio value or some other denominator of that, we maybe have seen our P&L, you know, let's say we've seen it at, I don't know, $3,000 here, okay? We're up $3,000. When we start to see this decline and we start to see it go down to 9, to 7, to 6, whatever, the pain then becomes a little bit different to if we just saw that chart pattern there. And that's the issue, I think, is that we anchor then what we expect to what we see in our portfolio. Oh, our portfolio values now, or our trade values now at 3,000. You don't realize P&L's at $3,000. Great. And then that makes sitting through pullbacks more painful because we've almost decided that that's our new value of our portfolio, if that makes sense. And if you've done that, you're probably going to nod your head now and go, yeah, I know exactly what he's saying. I've been in trades where, you know, things have gone my direction. I've looked at my portfolio value and gone, that's very nice. And then I felt seriously uncomfortable when things have unwound. And actually that discomfort generally has made me perhaps come out here and say, oh, I don't want to see that money disappear. You come out for maybe plus 2.5K and you go, right, I didn't want to give any more back. I didn't like to see that going. And actual fact, you were really on just phase one of a pullback, and it could well have gone up and it could have been a 10K trade for you. So the toleration of pullbacks, in my opinion, there's a couple of things. We'll look at the second one in a second, but one of them is to not look at the financial gain that you've made in the trade. So you've made the gain, you've made the trade, you decide and you say to yourself, okay, I'm going to have to expect a pullback, right? Expect it. The chart will not likely go from here to here. If it does, it's a Billy bonus. We take our 10K, assuming we're a 10K target, $100 target, doesn't matter the order of magnitude there. We take our profits and we run. However, it's going to likely do this on its way up. It might double top a bit, come back, test, fake people out. If you're swing trading for the bigger move, you know you have to tolerate that kind of stuff. And so framing yourself and conditioning yourself to say, right, I'm going to have a pullback, make it easier on myself by not looking at my unrealized P&L, not looking at my new portfolio value, and just looking at the chart and saying, okay, what will I tolerate from a technical perspective? Okay, I might tolerate a 50% pullback, but I wouldn't tolerate more than, say, a 70% pullback. Or you might be in a specific setup where that's way too loose, and you might be saying, well, I wouldn't tolerate more than a 25% pullback because the specific setup, it's a very much a momentum ignition type play. And so once you've framed it for price position, you've looked at it and said, okay, where would I still expect myself to believe that it's a long trade, the long trade is still on? Okay, it's here, so in which case now my stop is going to be here. And then you're comfortable with that. Sure, listen, I'm not saying that we're going to be able to just blanket out the emotion if we're a frustration that we had 3 on the table, has come back and you've now made $500. You are going to be, but you've got to kind of be comfortable with that if you want to get the 10K trade that you ultimately expect to get. So that's number one, is planning it out, not looking at your P&L and deciding, okay, I don't want to frame it in terms of money made. I want to look at it from a pure technical perspective, and that will help you hold on to the pullbacks. The second one, guys, is to utilize the power of scaling. You know, scaling very quickly, scaling helps if you can't sit through pullbacks on a full boat, so to speak. So let's say you got your full clip there, it's gone up, it's coming back down, and that feels too much. And let's say we're making the assumption that full clip was still a decent risk reward ratio here and you're happy with that initial risk. But let's say it's now gone up now. You're probably either trading too much, or one way that there's always that fuzzy zone, right? And I've been here before, guys, where I've gone to really squeeze the position size, and it's been right on the edge of my comfort level. And then when you start to get these bigger trades, you know, that becomes more magnified when it comes back in your direction, but you still want to trade that bigger size because you're comfortable with the initial risk. So how do you deal with that? So one thing you can do is just to scale off your position. So as the position goes in your favor, and let's say you say, well, I will just have a trading stop on my first scale. And so then if you struggle to not look at your P&L or your unrealized P&L, you can always say, well, I'm banking X amount. I know that I'm banking that because I'm going to scale out half or a third or a quarter of the position, whatever it is, at that. So really, my unrealized P&L is X. And one way you can do it is kind of update your own spreadsheet and say, update your own Excel spreadsheet or G Suite spreadsheet that says, okay, this is my position, this is my current P&L, and that's based on where the trailing stop would be on the first half, and assuming you got stopped out at break even or whatever the stop is on the second. So you update your P&L to allow for that scaling. And also for the kind of first thing I mentioned, guys, if you want to do that instead, like manage your portfolio in a spreadsheet, and instead of having the mark to market unrealized P&L, i.e. the current trading price, then why don't you have where your trailing stop will be, and then you move it up with your next stop. So regardless of how high that goes, if that's going to be your trading stop, well, let's say it's 50%, then your trading P&L is going to be 1.5k, right? Because let's say you've got your trailing stop at 50% of the move, that goes to 3, your P&L you look at, you can visually see is 1.5k. The good thing is that won't move as the price comes down. As the price goes up, however, that will increase, and you can update it every kind of day, whatever it may be. Maybe it's gone up to, that's gone up to 4, so that will go up to 2. You get the idea. Then if that comes down, that's still not moving, so you're not feeling the pain of the pullback so much. You're only feeling it as it rises. So there's a couple of tips and tricks for that one, guys. I think the point is to work out yourself where your potential weakness is or your strength is, and ultimately what you're trying to achieve. If you're trying to achieve holding trades longer, and you know that you've gone back through records and you should have been holding trades longer, but something's made you come out and you can't tolerate the pullbacks, then try something like this. If it's a case of you're trading on a whim, you need to go back and kind of redo the strategy and work out that really you should be trading longer. So once you've defined that and you're sure of that, then one of those two things may help you kind of hold on for those bigger moves and kind of trick yourself a little bit, not like tricking ourselves, but get round the aspect of the emotional feeling we have when we see that P&L up at whatever it is, and then giving it all back and then feel the pain and wanting to come out. All right, guys, if that's helped, thumbs up is appreciated, and I'll see you next one. Take care. Bye bye.